Shaun, welcome.
What's happening, Peter? Morning.
Awesome. Yeah. So we just wanted to touch upon this and a couple things because I was looking over what our team production has been since this whole thing started, and we've closed 22 deals. We've put almost 30 under contract, so stuff is definitely getting done. And I think given all the circumstances, those are pretty good numbers. But when I delved into them, 60% of those were in Brooklyn. And so I thought we should just spend a minute or two and explain to the marketplace why those are why so much of the activity is happening in Brooklyn, because I think it really can shed some light on how buyers are looking at the marketplace and just what's really happening on the ground. So
Sure.
What would you say would be the first couple of factors about that, Shaun?
Sure. Well, I think from one standpoint, the renter demand has actually, not been as, hasn't dropped off as severely in the prime neighborhoods of Brooklyn as it has maybe in some other, pockets of Manhattan where the rent dislocation has been more severe.
Right.
There are some buildings in Park Slope, Cobble Hill, Carroll Gardens, Williamsburg, Greenpoint, where, rents haven't adjusted more than 5 to 10%. There's no arrears in the building. You don't have a lot of these issues of, what is the real rents to the degree that you have in certain, locations of the city. It's harder to sell something with 30%, vacant units. So I think, the buyers that we've been transacting with are seeing this opportunity, buying the dip, quote unquote, and really just trying to see past the immediacy of the problem to take advantage of buying really good, attractive bricks at cap rates that should allow you to either acquisition finance or refinance at a pretty attractive spread, when the fog of the pandemic kind of lifts.
Right. So one of the things you're basically just pointing out that if you contrast it with Manhattan, say, where rents were 30-40% higher in some of the prime markets of Brooklyn, the rents weren't as high. And if people were escaping, let's say they were escaping from Manhattan to some other place in these markets, like say a Park Slope in Brooklyn, they were already there. They already had less pressure of the city. The rents didn't fall as much, and occupancies in general haven't been impacted as much.
Correct. Like Prospect Heights rents, from what I hear, from talking to owners, like they're basically at par with pre-pandemic, levels. Park Slope, I mean, you have a lot of the open space in Brooklyn that you don't get in Manhattan. There's a lot more outdoor space, larger units. I feel like the majority of Manhattan tenants probably spend in a bigger share of their time outside of their apartments, whereas the Brooklyn tenants, in general, more established New Yorkers and have built a home inside of their units, and they're a little bit less quick to flee.
Yeah, the flavor of the borough is definitely different. Mike, when we were looking at further in those 60% of those deals coming from Brooklyn, a lot of them were mixed use, which I thought was really interesting because mixed use implies that you have retail. Everyone's been freaking out about retail. Obviously, retail has a lot of headwinds right now, and there are acute ones, but there's some big opportunities here. And what have you noticed in terms of that product type in the terms of the trades? Because a lot of the buildings that we've been selling have been mixed use buildings in Brooklyn.
Yeah, I think that what we're seeing is an actual interesting mix of owner operators teaming up with a retail tenant and actually buying building as almost like an owner user investment operator. So one of the deals we sold was a corner mixed use, vacant retail. The guys paid a good number because they are going to own the building and also own the restaurant, put their own restaurant into the property. And then another property we sold is going to be a headquarters for a professional real estate, investment company. And I think the reason why they were able to buy that is because they're looking, okay, we're going to put our office in there for 2 years, let the market settle. And then, once the retail market comes back, they're going to lease it up at what they believe is, going to be a strong number. But I think that we're seeing a number of owner operators that are typically in Manhattan come over to Brooklyn to find, buy a property at what they think is a discounted number.
Right. So you can come in and kind of expand into the weakness, I guess, if there is vacant retail or you have someone who's shutting down their stores, restaurants, et cetera, that are looking 2 years out that think there's going to be an expansion. They're looking at this as an opportunity to buy mixed use.
And we're also seeing that vacant retail that has built out restaurants is also extremely strong because
Yes.
retail, the restaurant tenant right now can't get financing in terms of to be able to do build outs and things like that. So what they're doing, if you already have a built out space, a good example, we sold 229 Kent Avenue for about 1,100 a foot, but that the buyer was able to lease that space for 13,000 a month within 2 weeks of closing.
Wow.
Reason being, built out vented space. So
Right. So they didn't need to do any venting.
Exactly. Didn't need to do financing to build out a space, take 3 months, all that. But that's what we're seeing a lot of, that there are a lot of demand for restaurateurs, especially in Prime Williamsburg, Prime Greenpoint, if you have a built out restaurant space. And we're still hitting premium numbers, in terms of sale prices, and the owners that are buying from us are getting good rents, even, post closing, with built out restaurant spaces.
Shaun, what were you going to add to that?
I was going to add the entrepreneurial tenant that is partnering with our buyers is thinking the same way our buyers are. They're entering into a lease, like Mike just mentioned, 229 Kent Avenue, 11,000 a month, across from Domino Park. The lease was built in with a 12-month ramp up, a 12-month free rent. You have an entrepreneurial tenant that wants to start in business, wants that location, and everybody just budgets in a little bit of year of turbulence. And that is, in a nutshell, how the entrepreneurial buyer is buying today. The question you should really be asking yourself is not only what is today's mark-to-market rent for this apartment unit or store unit, but also what is my gut telling me based upon historical narratives, based upon my predictions of the future, this average unit will rent in the summer of 2022,
Right.
the summer of 2023. Because if you're trying to buy a building today and mark to mark every unit down to its lowest possible November 2020 level, you're probably not going to buy. You're probably going to get beat out by somebody. And, what you should really be thinking is, look, I've been in Williamsburg for, how many years? Like a 2-bedroom in the last 5 years has never gone below 3,000. If I'm buying a building at $2,500 rents at a, low to 5 cap, low to mid 5 cap on those reduced rents, when they go back up, summer 2022 is the number I have, or the date that I have in my head, you're going to look pretty smart. And because this is not urbanism isn't dead, cities aren't dead. It's just, it's a micro event that is just going to take some time to lift, but not all neighborhoods will recover the same. I think you can look on Street Easy and see the depths of the supply issue. And, but I do think that it's going to recover quicker than people think as employers come back to the offices, whenever that happens, whether it's a health-based solution or not. And by that time, some of the best deals will have been gone.
Yeah. Well, so, and look, I think we talked about this a couple of weeks ago, that when tenants do come back, it's going to happen quickly. This is going to, it can snap back in a 90-day period. So you've got to be prepared for that. So thanks. We wanted to keep this one quick. So in Brooklyn, mixed use selling, free market selling. There's still pricing discovery happening in some of the heavily regulated product, especially buildings that need CapEx, because you've got to price that in, and the marketplace is still figuring that out. But great to hear that you're seeing such positive stuff on the ground. And anything else that I forgot to mention that you want to add, Mike or Shaun?
Nope.
I think Mike and I we think that this is the time to buy. I mean, we really do. Obviously, we're making our predictions on the future, but we think significant opportunities exist in prime markets at discounted pricing. And when that happens in New York City, you shouldn't be anything but looking, studying, walking, touring, bidding on deals right now, because that's how you're going to know what's really going on.
Yeah, you have to look at everything. So thanks, guys. This is informative, and we'll talk to you soon.